Hello. Hi there. How are you doing today? Welcome. This is Kingdom Builders Credit Repair with Michelle Green. And what we're doing today, as always, every Friday from 12:30 until 1 is sharing with you some credit and financial tips on how to maintain your credit, your money, your finances, your budgeting, the whole nine. We are super excited today for you to be here. So thank you for joining. Make sure that you are subscribed, that you like and you share, and that you have told a friend about what's going on in these social media streets. Okay? Tell a friend, let somebody know that we are here and that we are sharing a wealth of information with you and your family and your friends and just the whole entire world. There are billions of people who are watching, and we want to make sure that you are in the loop every single week pertaining to your credit and your finances and anything that we can do to help you in this arena. So again, my name is Michelle Green. I'm the founder of Kingdom Builders Credit Repair, and also you may know me from being the founder of Kingdom Builders Business University, but we're not talking about business today. We're talking about personal credit. Yes, we are. So I wanted to talk about today home buying. What is the home buying process for someone who is trying to purchase a home? Because when we have a client in our credit repair program, which is a 12-month program, by the way, we kind of break it up into 6 months and 6 months at a time, but we have a program where most of our clients, I would say probably about 90% of our clientele are here so that they can purchase a home. So since this is such a big thing for our clientele, what we want you first to know is that here at Kingdom Builders Credit Repair, or short for KBCR, what we do is help people to position themselves for home buying, but really to be in position to purchase any type of large loan amount. And we're talking about $100,000 or more. Every single client that we have is positioned for to receive over $100,000 in a debt or a loan of some kind. So what we want to do first, as always, is just talk a little bit about credit, and then we'll jump into the whole home buying process. And I want to also touch a little bit on home refinancing as well as selling your home. All right, from the credit perspective, not the realtor or the real estate agent perspective, but from a credit perspective and what you need to prepare for. Okay, so let's talk about what credit is first, as we always do. We should know by now, if you've been watching our series on TV, you should know by now that credit is something that you are going to contract your agreement with as a trade-off for money that you don't have right now. So what does that mean? That means that if you don't have enough cash, if you are working a job or if you're working a business and you don't have enough money to pay for buying a home or buying a vehicle or obtaining some clothes from a particular store that you want to purchase from, then you can put it on credit. But that is an exchange. It is a committed contract agreement between you and that creditor to say that you're agreeing to pay back the debt no matter how long it takes you based on the terms and conditions of the contract agreement, right? We all seen those terms and conditions, but I know we haven't actually read those terms and conditions. All right, but that's all right. That's quite okay. But we want to make sure that we understand our commitment in the whole equation. Because when we are looking at purchasing anything, if we are looking at exchanging our money for credit, because we don't have the enough money or cash to really make the exchange of what it is that we want right now, then we just want to have a conscious mindset that we are agreeing to pay back this money for what we have exchanged it for, regardless of what situations or circumstances come up in our life. The problem with most of us when we get into trouble with credit, it usually starts from the fact that we forget that we made this commitment. And the commitment is for us to be able to pay it back regardless of our circumstances, of our situations. There are so many different things that are going to pop up in our life. And that is another thing that I think that we should be conscious of as people, of understanding that, hey, even though we are signing the contract right now, and the contract agreement may be for 5 years down the road, 10 years down the road. And when we think about a mortgage, we're talking about 30 or 40 years down the road, or sometimes even longer. But when we talk about making that commitment, we really want to think about the whole picture of how long will it really take me to pay this debt back. And we want to be conscious enough that we are planning ahead of the terms and conditions, not just accepting what terms and conditions that the creditor gives us, but also to be able to position ourselves so that we could actually set up our own terms and conditions of how we're going to pay back that debt. So what do I mean by that? I'm saying that we can literally decide if we're going to pay $100 a month, if that's the term and condition, or if we want to pay $150 a month so we can pay off the principal balance a lot faster. So we have learned previously that we should be paying bi-weekly or weekly if we can, correct? So what we want to do is always have the conscious mindset that whatever we put our name to, whatever we sign that agreement saying that we are agreeing to pay back X amount of dollars, we have to be committed to completing the contract agreement. Now, I'm not saying, like I've said before, that we don't run into situations where we cannot pay that money back, but we should at least have some type of mindset that if we can get caught up within a few months, at least try to get caught up. At least put something on it if you have it, and that will help to save your credit. We'll talk about that another day. But today, I would like to really dive into the fact that we are going to be talking about home buying. So we get so many questions around, what does my credit need to be like? What kind of scores do they look for? What is it? What is the actual process from a credit perspective of what it looks like for a client to go through our program and to end up on the other end a homeowner? We have had, I would say probably, hundreds of thousands of people who have come through our program, who have purchased a home, who have refinanced their homes, and also who have sold their homes and bought another house on top of that one, or maybe two or three. So we've had several people who have come through our program and done that, but we get always this question around, what does the process look like? How long will it take me? Can I get it done in 30 to 60 days? So let's talk about that for a second. For starters, whenever you're purchasing a home or getting ready to prepare for a purchase of a home, you want to definitely understand that there are three things that they're going to be looking for. And the main three things that they are looking for is, number one, do you have consistent income to show proof of that you can actually put a down payment and cover closing costs? And if you cannot put a down payment and cover closing costs on the home, then you could also get, down payment assistance from usually the lender or the real estate agent, or the realtor will have some type of source for you in your local area to be able to get some type of down payment assistance. Well, number one, if you're on the job and you have a 401k, then that's going to be the original thing that you'll need in order for you to have the money set aside for your home. So it's not just about the income like we talked about last week, but it's also about having enough money to put down on the mortgage. So it's actually going to cover like 1 month of your mortgage payment. And then on the back end, the closing costs are like your title fees and all of the different things that it takes for the attorney and for the lender to be able to close the actual loan after it has gone through underwriting. So the initial process of you making sure that you are positioned for buying a home is consistent income. So do you have a job that you have been working, or do you have records of the last 24 months, 2 years of showing that you have had a consistent income coming in so that the lender will be able to solidify that you can afford this house? Okay, you can afford the home. So that is number one. We want to make sure that we have that flow of income coming in, right? We want to make sure that we are stacking our money. We're stacking our funds, as they say. Okay, so we want to make sure that that is in place. All right, so once we clear the income, the second thing that they'll be looking at is your credit. So what does your credit score need to be? A good credit score would start at, I would say, around a 620 to 640 range and up. So if you are around the 620, 640, preferably and recommended a 640 is where the lender would minimally want you to be at in order for you to gain a regular conventional mortgage loan. Now, there are different types of loans that may require a lesser credit score, like the USDA loan. If you're in the military, there are special loans where they pay 100% for that. A VA loan is what they call that. But the fact is of the matter, most people are going to fall in that category where they're looking forward to get a regular conventional loan. And when you're talking about a conventional loan, you're talking about you want to have a decent enough score, at least a 640, like I said, recommended. Because if you're right at the bare minimum, which is 620, then that means that if something happens, if something pops up out of the blue and it hits your credit and it takes your score down, then it could cause you not to be in position to be able to purchase that house at the end of the closing. So we know that, as we know already, credit changes every 30 days. So while you're in a process of buying a home, guess what? There's still an opportunity for your credit score to go up and down. It can fluctuate. So we want to make sure that we have a good enough score that even in the event that something pops up unexpectedly, we will still be able to move forward with our house. Okay, let's just ponder on that for a second. So the credit score needs to be around a 640 bare minimum, and other circumstances may allow you to have, like a FHA loan, might allow you to have between a 580 to a 619. So if you're somewhere in the 580 to a 619, then you may want to consider a different type of loan. But if you're like most people going for that conventional loan, the 640 range and higher, preferably if you are looking on the high end side, if you can get your scores up to 700 or 720, then you will completely be out of the clear. You will be out of range of worrying about being able to close. So we got the income down pat. Then we have the credit score has to be at a certain range. Well, how do you get the credit score to that range? That's what we cover in our credit repair program. We walk through every month with you a plan that is specifically catered to your particular items on your credit. And the thing that we have to understand is that no two people have exactly the same credit report in the world. There isn't anybody that has exactly the same creditors that were established exactly at the same time with exactly the same amounts of money and exactly with the same amount of monthly payments. So when we think about our credit, we need to understand that we are definitely unique. And that's why KBCR caters to each individual specifically to their needs, because not everybody is the same when it comes to their personal credit. Now, when we look at that personal credit, we want to make sure that you have a balance of loans and you have a balance of cards, because we learned earlier, and you can go back and watch the previous videos on the Kingdom Builders Credit Repair YouTube channel or TV show powered by CTR Media Network. You can go back and watch that video, and we talk about, how we establish the credit lines and different things about how to get you going. But we want to make sure that you understand that, number one, when it comes to the credit score, you really have to make sure that you're maintaining a balance of both loans and cards, and you're not just out here with no credit at all established on your credit, or you're trying to get everything that's negatively hitting your credit removed, but you're not planning on having anything open and active. Because if there's nothing open and active, then how in the world can you say that you have a good credit score? That's not how credit works. Credit is based on activity. So what is the activity that you have on your credit report that will show and prove that you are trustworthy enough to maintain and have a 640 or higher credit score until you get that mortgage, and even thereafter that you would maintain that cycle of having a medium to a high credit score range? Okay, that's what we're talking about here. We want to make sure that you have the mortgage down pat with your credit. So you got the income, you get the credit. The third thing is that making sure that you have completed your taxes in the last 2 years. So those are the main three components of making sure that you are able to move forward with purchasing a home. So when we talk about taxes, taxes are basically the thing that makes the world go round, because we know what's guaranteed, right? Taxes and death, okay? Or some people say taxes and debt, all right? But anywho, the point is that we have to make sure that when we are looking at purchasing a home, refinancing a home, or even selling a home, that we have these three things intact, okay? So let's talk about taxes for a second. So taxes basically are the thing that we are paying for, regardless of wherever we live. Every country, every continent has a taxation system. So with your taxation system, when it comes to your income, the money comes in, and what are the expenses that go out? What are the things that you're paying taxes on with interest already? What are the things that you can actually use as a tax write-off by itemizing your credit? Itemizing the things that you are already paying for, whether it's a utility or a debt. And we learned previously that utilities and debts are in two different categories. The utilities are the recyclable bills, and the debts are the things that are contracted that actually show up on our credit. So when it comes to our taxes, have you done your taxes in the last 2 years? Are you delaying your time to do your taxes, and you're thinking about buying a home in the next couple of months? Now that's going to pose a problem, because what seems to happen is, if there's no record of you having your taxes completed, which basically says that, hey, I'm a law-abiding citizen here, and I am making sure that I can prove that what my income is on my job or business is the same that is reporting on this tax statement. So that's the reason why there is a double assurance of making sure that you have that income intact. But it's also so that we can see exactly what the expenses are. What are the extra things that you're paying? Which is why in the tax arena, we look at how much is the income, and then what are the adjusted gross income amounts. Adjusted gross income amounts only exist when you look at the things that you have paid for. Do you contribute to nonprofit organizations? Are you making any donations? Are you tithing or giving to any type of charity, providing any type of offering to a nonprofit organization? Do you like helping people in the community, but maybe you just hadn't wrote off what you've done? Do you like going to like Goodwill and giving away the things that you no longer use in your household? Those are all tax write-offs, things that we would deduct from our actual income so that we would be in a certain tax bracket. Now, when we talk about that tax bracket in the terms of buying a home, though, what we want to show is that we are making a decent amount of money with that adjusted gross income. So again, We're talking about the income coming in. We got our expenses and the different things that we have contributed to that we are deducting from our total income to get our adjusted gross income. And that adjusted gross income needs to be in the last 2 years added together to see if you qualify to purchase a home of a certain amount. So let's say, for example, you're going for a $300,000 house. Well, a $300,000 house, you would probably want to show in the last 2 years that you've made close to $100,000 because we're talking about you being able to pay off $300,000 plus interest. So therefore, you need to show proof that you are making a decent amount of income. And if you're nowhere close to that range, then it can be adjusted by the fact that you don't have as much debt to pay off. So if you are the kind of person who maybe you don't have as high of an income and it doesn't show on your taxes that you made that much in the last 2 years, what you can do is offset that by the income that you do have. Let's say that's only about $60,000 to $70,000 in the last 2 years on your adjusted gross income. And then you turn around and say, well, I don't really have enough, I don't really have a lot of debt. So if you don't have a lot of debt, guess what? You would qualify still to be able to purchase, possibly depending on where your credit score is. So you see the three components, they all tie together. They're married to each other. So it's not as though that you would be able to utilize one without the other when it comes to home buying. You have to be in the right position to be able to buy the home. You have to be in the right position to be able to do what it is that you need to do, but you have to implement those three components. So taxes are, something that a lot of us don't really want to deal with, but the truth of the matter is, it's really not that difficult to engage into knowing exactly what your taxes are going to be like for the year, because you're really in control of that. And when I say in control of it, think about it like this. Now, whether or not you pay property taxes, whether or not you pay taxes for the school, whether, you got kids that go to school, right? So we're paying for the things that taxes provide. So taxes provide a fire department, a police department, hospitals, public schools. All of those things are things that we pay from our taxes. So what have you contributed to that maybe you're not actually implementing on your taxes when you do your taxes every year, so that you can actually get a better break, or even adjust that according to how much you have given in tithe and offering or to charity? Because when it comes to tithe and offering, that's for those who believe in God. And for charity, most of the time is labeled for those who don't necessarily believe in God. And that's absolutely fine. But the thing is that whether or not you believe or not, it's still a form of taxation that you can write off on your taxes. So our goal for purchasing a home, our goal for being able to refinance a home, is to get ourselves up higher with our credit, making sure that we have our income down pat, and also making sure that we have our taxes taken care of. So income, credit, and taxes are our three components to making sure that we can purchase a house, making sure that we can refinance, or that we can sell our homes and buy another one. Now, I want to talk just a little bit about the refinancing. Normally with refinancing, our lenders are looking for a score of about 680. But they also will still need the last 2 years of taxes. They will also need verification of your income from your employer or from you as a business owner. Okay, so if you're not keeping track of what you're bringing in, especially the business owners out there, and y'all know in Kingdom Builders Business University, I teach my students they better have their stuff on paper. And whatever's on paper, it better be correct. And that's why we have created that business university, so that we can educate entrepreneurs how to do business the right way, how to make sure that you look good on paper and you are correct about what you're doing in your business. But you can go to www.kbbullc.com if you're interested in our business school. But back to credit, you want to also make sure that you have your profit and loss statement if you are an entrepreneur and you're trying to purchase a house. You want to make sure that you have some type of budget, an expense sheet, something that's going to show where that money came from and is it going to the right place? Like what I'm saying is, do you have your money like going to different banks? Do you have your income flowing into different sources? Or you got to pull from a Cash App or from a Chime or from some other source and then pull all the money together? Well, I would advise you guys to make sure that you have one account for the income and then for everything else have a different bank account. Whether it's a business bank account or a personal bank account, your income should be going to one place. Okay? We need to make sure that if we're receiving an income, especially for those who are entrepreneurs, if you have different businesses, make sure your income is going to that particular business bank account and not several different ones and you're mixing up money. So that when you get ready to go to the table with the lender to see if you are qualified for financing, they don't have to ask you for paperwork 1,000 times. See, the process with home buying really boils down to paperwork. What's on paper versus what's coming out of your mouth? Are you telling the truth about all of your finances? Do you know your taxes are completed correctly? Do you know your credit score? Have you ever pulled your credit report? Do you know that your credit reports and your credit scores are two different entities altogether? They are not the same, even though you can get a credit score on the credit report through a Vantage system. But when we talk about the real scores that are ran, the real scores are ran through my FICO. And again, if you want to go back in the previous videos, I have a video for that too. So listen, we want to make sure that you are completely prepared for the process of going to a lender or a bank or a credit union before you make that purchase of a home, before you decide that you're going to refinance, or even before you decide that you're going to sell your home. If you're selling your home, you don't necessarily have to have all of that paperwork, but when you position yourself as getting ready to buy another house, you would want to make sure that you got the money that you received from selling your home in a certain place to show proof of income again, and to show proof that you have money set aside to position yourself for buying another house. So when you're looking at it from the lender's perspective, what you're saying is, hey, I can not only just qualify based on my income from my job or my business, but I qualify by having this lump sum of money from me selling my house sitting over here in the bank. So that's my security, or as they used to call it, my collateral for making sure that I can go into a new home of my choice. That's how we make dreams come true here at KBCR. We tell you the truth. We give you the nitty gritty. We're giving you things that everybody else is not going to tell you, but it's specifically catered and customized to your particular credit. So if you haven't signed up yet, go ahead and click that link. Actually, I first would like for you to make a comment about this video so that we can know that we are giving you some meat and potatoes. We're giving you something that is really implementing your life and making changes to your financial and credit situations. Okay, and then secondly, I want you to make sure that you're subscribed to the Kingdom Builders Credit Repair YouTube channel that is powered by CTR Media. We want to make sure that you are connected with us so that anytime that we share any tips on credit and finances, that you get it firsthand, live here from 12:30 to 1 on Fridays, every Friday. We love seeing you guys. We thank you for watching, and we will see you next week. Take care.